Hey everyone, Tom Gentile, welcome to Tom's Trading Room, and in this video, well, we're going to be working on the Bloomberg Terminal today, looking at research in what I like to call 2021 stocks that I want to own right now. So we'll be looking at fundamental research through Bloomberg, we'll be looking at technical research, and option strategies using Tom's option tools. So without any further delay, let's get started. Okay, so first we're going to start with Cisco CSCO. Now, for those of you who don't know, they sell internet protocol-based networking. All right, that's what they do. And if you take a look at this particular chart, as the revenue grew in 17, 18, 19, it did pull back in 2020. We know that, just like everything did. And they're expecting a slight pullback in revenue in 2021. But take a look at their earnings per share. Their earnings per share grew very comfortably and even grew in 2020. They're expecting a slight pullback in 2021, but nothing significant. So stability is the key here. Now, when you take a look at all the other data that I don't have time to do in this video, it's trading at about 40% below its estimate, and that's its fair value estimate. Their earnings per share, as you can see here, are scheduled to grow around 4.8% over the year. Now, they pay a dividend. Their dividend is about 3.75% or so. So when you look at it, this is a very healthy company, pays a dividend, and it's a value too. It has a great past, and therefore this is one of the safest stocks, probably the safest stock of the five that I'm looking at with you. So taking a look at the technicals on Cisco, a couple things I want to mention to you. First of all, this is a darknet chart you see here. And since about mid-August to around mid-September, Cisco's going to around $42 a share. Started a series of lower highs and lower lows. We had a darknet bullish signal below 40 and another one below 36. Right now, the chart is rebounded and we're trading right below $39 a share at this time. So it's nice to see when your technicals, even if they're contrarian signals like we see here, are lining up to meet longer-term fundamentals. Now, you could either buy the stock or you could look at options, which we're going to do right now. So for options, I'm just going to go to options, option chains, and I'm going to bring up the year end in December 18th to start with Cisco. And as you can see here, I've got calls on the left and I've got puts on the right. Calls on the left show that the 39 calls are trading for $1.61. If we expected Cisco to run well above 39, that might be an idea. Another idea would be a bull call spread where you buy the lower and sell the higher strike and create a spread trade for much, much less. Now, if you really wanted to have a chance at owning this stock and doing it at a better price than buying it right in the markets, maybe you might be interested in selling a put. In this case, the December 18th 38 puts are selling right now for just a bit over $1.40. Now that brings $1.40 into your pocket, and it also allows you the obligation to buy Cisco at 38 if Cisco stock is trading at or below 38 on December 18th, 2020. So that's a look at Cisco's options. Let's move to our next stock. Okay, Evercore is next up on the list. The symbol is EVR. Now, Evercore, they're an independent investment banking house. Basically, they do advisory services all over the world. And I wanted to show you the ratios on Evercore. So when we look at the ratios, and you're looking at something like PE ratio, this is a 14. All right, gives you an idea what this ratio is when you compare it to like an Apple, an Amazon, a tech company. Very, very low ratio. These guys are trading at about 32% below their estimate of fair value. Their earnings are actually expected to grow quite considerably. So when you take a look at growth potentials here, their one-year gains look like 22%, sustainable growth ratio 12%, and it just, this one just keeps going on and on. Their return on equity, 27.1%. And, if you were to look at this sheet in detail, you'd find that not only do they continue to grow their earnings, they pay a reliable dividend. Probably the only things going against EVO or EVR is that the share price has been volatile over the last few months, and there has been some insider selling. All right, so that's part of the problem with what we see with EVR. But EVR just hit new highs very, very recently. It's coming off those new highs. You take a look at a chart on EVR, and you'll see just how crazy this stock is going. Okay, in order for Darknet to give a buy signal, a stock actually has to pull back for a sustained amount of time. That just isn't the case for EVR, Evercore Partners, as it was moving sideways between the 61 to 66 area until it broke out in October and traded up to its current highs, close to $90 a share. Earnings came out recently. They were good, even though we had a little slight pullback. Market turned around, and we started moving higher to new all-time highs, new 52-week highs. But I wanted to show you also the 1030 moving average, which made the cross down here in the low 60s and has been widening ever since. Again, great technicals that line up with great fundamentals. Let's take a look at the options. So, clicking on options chains, and here's what we're looking at for EVR. So EVR's call options, the 90 calls, and this is for November. We want to look at the Decembers. So I'm going to go and click on December, and let's go ahead and update that right now. There is our December options. Take a look at this, $2.80 for the December 90 calls. So we'll need to be above $92.80 to be at break even on this call spread. To do the spreads, for instance, you could be looking at going out even in 90.95 would be a 2.5 point spread that could be done for looks like about $1.50 to make $3.50 on the trade. The only other thing you could do, that in my opinion, is we could look at selling put options. And the December 85s are trading for $3.33. That means if you sold these puts, you would take in a credit of $333 for every contract sold. That's good for 100 shares. That reduces the break even on the trade by $3.33 below 85. All right, so that makes it pretty significant there. And it allows you, again, to pick up the stock for below market price between now and December 18th if EVR is trading at or below 85 on December 18th. So that is the options chains for EVR. Let's move to the next one. Okay, next is KBH. This is KB Homes. KB Homes, you know what they do. They're a home building company right here in the U.S. And when I look at KBH and I look at them versus their competition. So you got Lennar out there, probably the biggest home builder when it comes to building spec homes. Then you've got Berkshire Hathaway, which is in the business. D.R. Horton, Pulte Group. All of this industry is just fantastic right now. It's been going very well. And then you've got things like housing starts and builder confidence that are, when you look at those, they're doing very well. Builder confidence at 85%. The mortgage rate is really pushing this industry as it is down to a little over 3% for a 30-year mortgage. Unbelievable. All of this gives you these valuations that this particular stock and this particular sector are poised to continue to do well. I mean, the PE ratio, when you take a look at it, it's probably less than half of the entire U.S. market when you put it together. They have an 8.8 PE. Their earnings are growing at about 20% a year, and they grew by 29% over the last year. The only thing that these guys got going wrong with them is what the whole industry has, and that is they're high on debt. Okay, they have a high level of debt. The home building industry as a total has a high level of debt because, again, they are trying to supply demand out there, and demand out there is very, very high. So that's the fundamentals on KBH. Okay, now would be a great time for you to smash that like button and show me some love, as it helps out our YouTube algorithm and helps support the channel. Also, if you hit subscribe next to us and ding the bell, you'll get all of these cool videos as soon as they're uploaded. Ready to get back to work? Let's go. So, looking by the chart, KB Homes looks like a value play here. Started off middle of August around 37.5, moved as low as 34, then started to create a couple of higher lows and higher highs. Really topped out here in mid-October around $42 a share, and has been dropping since then. The big drop came, and that was earlier in the week when the vaccine news had come out, which really doesn't make sense for a home builder. But nonetheless, the stock did drop from about 35 down to near 30 before rebounding afterwards. So again, more of a value play. If you were going to wait for technicals to line up with fundamentals, couple things that I like to do. I like to wait for a dark net buy. I like to wait for, if we get a turn here in the moving average crossovers, that might take a while. The other thing I could do is I could go look at the money calendar and see if there are any seasonals that are working out with KBR. Now, as far as the option prices, let's go see how cheap or expensive those are looking. So once again, we're going to go to options, option chains. I've got KBR. And again, I'm really just going out to the end of the month. If you're longer term on this, you might consider options that expire in January 2021. Even 2022 and 2023 options are available on KBH. Let me update this. And we're going to look at, once again, the call options for KBH and then the puts. So here are the calls, $33 stock. You see the 34 calls are $1.85. And then you come down a bit and you can see the 37s are 83 cents. So for 83 cents, we can actually slash off a good 40% of the cost of the 34 calls if you were to buy the 34 and sell the 37. That's one idea. So buying the calls is an idea. Buying a call spread is an idea. And again, of course, there's always selling put options. The 33s, these are the at-the-money puts in December. They're paying about $2.23 right now. And what that does is that pays you to be obligated to buy this stock at $33 a share. You're getting $2.23 per share to be on the hook to buy it for $33. But if you like the fundamentals and you like this for the long term, then it might make sense. Either way, these are all bullish option strategies that you could take on KBH. Let's move forward. Okay, another home builder is MDC Holdings. They also offer a financial service business as well as building homes. And the fundamentals I want to show you here, I'll just tell you what I've done on the research. This was trading at about half of its fair value. Their earnings are estimated to grow around 27% a year. They grew by 55% over the past year, and they do pay a dividend of around 3.75% a year. But this is the big one right here, guys. Take a look at their equity. More importantly, take a look at what's going on between their revenue and their earnings per share. All right, this is 2016, 17, 18, 19, and 20. Just after the first quarter, hit it out of the park. Expectations that this is going to continue. Now, like I mentioned before, all right, with KB Homes, MDC does have a high level of debt. You got to keep that in mind when you're investing in a home building area, but this is one of the better ones when I look at the home building industry as a whole fundamentally. Okay, so here's the technical chart for MDC. Doesn't look as bad as the technical chart we just saw on the other home builder, KBH, and you can see that it was really more bottoming down here in August and into September. From there, we saw a couple series of higher highs. This was a sell signal that came from Darknet from a buy that was earlier than August 18th. But as you can see, market ran up to around 52. We had a pullback down. Look at that low that occurred back at the end of October, call it beginning of November, and that low actually occurred down in the low 40s. And that was a bullish Darknet signal. From there, we've ran up, we've come back down, and we've started to rebound once again. Darknet signal on MDC is a great contrarian buy for this particular stock. It mirrors up very well with the longer-term fundamentals that we were looking at on MDC. Let's see what the options look like. So, once again, Going to click on options, going to go to option chains. I can do a number of different things with options, but I thought I'd make it easy for this video just by showing some option chains here. Here's MDC, and stock's trading at $45.68. The 45 calls are $3 even, which means that if I buy these 45 calls, I need to be at 48 or greater to be at break even or better on or before December 18th. Another thing you could do is you could look at the spread. So the 45s, again, trading at 3. If you were to sell the 55s against the 45s, wouldn't take that much in. But if you sold the 50s against the 45s, you're taking in $1.10. You're paying out 3. So basically what you're doing is you're putting this trade on for $1.90. All right, 5-point spread, $1.90. That means you're getting a $3.10 maximum reward to a $1.90 risk. And like we showed earlier, if you are into owning the stock at a discounted price, right now on the screen I'm showing the December 18, the MDC December 18 45 puts are paying out $2.43 with the stock trading at 45.68. If we're above 45, you just keep that. You'll keep that credit. But if we're below 45, at or below 45 on December 18th, you could end up owning the stock. Just keep in mind that if you want to own the stock, this might be an alternative to buying it at current prices. The second thing is that this 243, you're getting paid on that regardless. So that becomes that comes off the 45, and that gives you your break even, which is $2.43 below the 45 strike price. So that is the technicals and options on MDC. And finally, on the fundamental side, let's take a look at Thor Industries. The symbol is THO. These guys sell, not only in the trucking business, but they sell recreational vehicles. And if you know me, I ended up buying a van earlier this year to transport my family and I back and forth between states. And so they have definitely benefited from the RV boom that has happened in 2020. The expectations are this is only going to become even bigger in 2021, as even though we have a vaccine announcement and that early results look good, it's going to be a year at least before this vaccine is out in the mainstream. So look at Thor Industries. If you take a look at some of the stuff here, you can see their PE ratio is a 20. And in fact, their PE ratio really puts them at about 20% below their estimate of fair value. Their earnings grew by 66% between now and this time last year. Their expectations is going forward, it's going to be less, but it's still going to be over 30% moving forward. Take a look at their estimated PE, and you can see that estimated price-earnings ratio is going from a 20 down to a 12.6, which is absolutely incredible. Now, again, and I got to state this too, Thor's biggest risk, and it's not that big of a risk, but their big risk is that they carry a high level of debt because, again, they are trying to meet demand, which has been bigger than anyone ever anticipated. So they got the value. They got the dividend. They are a healthy company. They've had a great past, and their future looks bright as well on the fundamental front. And here is the technical chart for Thor Industries. If you take a look at this one, probably the worst looking chart of the bunch. A total value play on RVing, as I said earlier, continuing to be a big hit in 2021. Stock was trading at above 110 back on August 18th. Has pulled down, double bottom down here below 90, had an attempted recovery. The earnings were fantastic as this stock went up above 105, but has now pulled down to lows, sitting now at around 80 before bouncing back off the lows earlier this week. So, when you take a look at this one, you got to say to yourself, all right, is there a value play here? Is there something else? And, one of the things we could do with Thor that we didn't do with the other charts is we could do an overlay. And that means we could go back and we could look at just the stock chart itself. And we could also look at let's call it the 60 to 90 day at the money implied volatility. So what we're doing is we're tagging that to see how expensive or cheap those options are. And again, relative to where they've been short term, they're actually quite cheap, which means that buying calls here or buying a call spread might make a lot of sense. Let's go find out. So let's go to options. option chains for THO. Let's go out to December like we did with the others. And again, this is not a recommendation. We're just looking at the option prices for December. Obviously, you would want to make a decision on your own investing, whether it's in stock or options. Stocks at 84.46, the 85 calls are $6.55. So even though the chart shows that they have cheapened up, they're still rather expensive, especially when you look at them versus the VIX, which is much, much cheaper. So in this particular case, you definitely want to look at spreading. For instance, the 85 calls, if you sold off the 90s against those, you'd bring $4.50 in to help pay for the 655. You're talking about 205 in terms of the spread cost. You could go out to the 95s and take 313 off the 655, and now you have a 10-point spread that's going to cost you a little less than $3.45. All right, so again, $3.45 risk to make that $6.55 reward. So there are several different combinations you could do, all in the cause of reducing risk, and you want to do it definitely on a stock like this, which is trending down if you're looking at the value play. Also on the put side, the 85 puts are trading for $6.70, 82 halves at $5.60. That means you're going to get paid. You're going to get paid this amount of money to obligate yourself to buying the stock at that price. So if you came down to, say, the 80s, for instance, I'll show you the 80s, $4.55, obligate yourself at 80. You take $4.55 off the price of 80, and that's your break even if you do, in fact, end up getting the stock. If we stay above 80, however, by expiration, you just keep the $4.55, or in this case, the actual credit that you receive. And that is the technicals and options data on not only Thor, but all 5 of 2021 stocks that are on my buy list right now. Hey everyone, thanks for joining me. Once again, hit that like button if you really like this video and show us some love. Also, subscribe to our videos, ding the bell, and you'll get them as soon as they're uploaded. Thanks for joining me. Podcast coming soon. We'll see you then. Bye now.